We move in now to the U.S. where stock index futures pointed to a relatively flat but mixed open as investors brace themselves for another slew of corporate earnings reports. In earnings news, Morgan Stanley, U.S. Bancorp, M&T Bank, American Express, Qualcomm and T-Mobile US are some of the major names set to report. Now, investors will also be gearing up for a slew of data from housing starts to building permits, both of which are due out at 8:30 a.m. Eastern Time. And mortgage applications will also be released, or should have been released by now. That should be 7 a.m. Eastern Time. And the future numbers there showing Dow Jones Industrial Average down 0.25%, S&P 500 up 0.06%, and Nasdaq 0.47%. In Asia, markets closed in the green as the dollar nursed losses after hitting 10-month lows overnight on dimmed prospects for U.S. healthcare reforms. The Nikkei 225 rose 0.1%, while South Korea's benchmark Kospi index reversed earlier losses to close up 0.16%. The Australian ASX 200 gained 0.79%, driven by strength in the heavily weighted financial sub-index, which was up 2.44%. Markets in Greater China were also in the money. The Hang Seng Index traded higher by 0.53%, gaining for a fourth consecutive session. The Shanghai Composite surged 1.42%, and the Shenzhen Composite rose 1.53%. The CSI 300 Index, China's blue chip index, closed up 1.73%. And in other market news here in Africa, Ethiopia plans to offer shares in its road building and maintenance projects to private investors. That's the latest step to open up and modernize the state-led economy. The Horn of Africa country has over 113,000 kilometers of paved roads and plans to increase that to 220,000 kilometers by 2019 and 2020. The move to partly liberalize the sector follows Ethiopia's decision to offer foreign companies stakes in the government-operated Ethiopian Shipping and Logistics Services enterprise early this year and its energy sector in 2013. Ethiopia is one of the fastest-growing economies in Africa, but the expansion has mainly been fueled by huge public investment. The spending has gone into roads, schools, new highways, and dams for hydroelectric power. Zimbabwe's capital, Harare, plans to raise a $100 million bond this year to finance the building of new homes and end a decade-long housing shortage. The mayor of Harare says the capital has outgrown itself and the population has grown beyond the city's initial designs. According to him, an original plan to obtain $150 million through the central government became entangled in politics. Harare is home to about 1.6 million people within its city limits and some 2.8 million in the greater metropolitan area, a figure that's slightly less than a quarter of the Southern Africa country's total population. The Ministry of National Housing said in 2013 that about 1.2 million people were on waiting lists for homes. Zimbabwean law requires all urban housing to have electricity and running water, and the government has been accused of abuses after leveling homes that don't comply. And in Ghana, the president, Nana Akufo-Addo, says the country will not extend its 3-year aid program with the International Monetary Fund beyond April 2018, despite continuing fiscal difficulties. The president's announcement is a surprise turnaround after government officials said last month that Ghana was considering a request by the Washington lender to extend the program to December 2018. Analysts say an extension would have reassured markets of the government's commitment to fiscal discipline. Akufo-Addo says, however, the government is on target with its policy to restore growth and create private sector jobs. The $918 million agreement was signed in April 2015 to address problems of slow growth and high public debt. And Sudan's annual inflation rate dropped for the first time in more than a year in June, falling to 32.63% from 35.52% in May. Sudan's economy has deteriorated since the South seceded in 2011, taking with it 3/4 of the country's oil output, its main source of foreign currency and government income. The government cut fuel and electricity subsidies in November in a bid to tighten its finances, and petrol prices rose by about 30%, leading to broader inflation. Before the June figures, year-on-year inflation had climbed every month since March 2016, when it stood at 12.94%. A dollar shortage and a ballooning black market for hard currency have also made foreign-made goods more expensive in a heavily import-dependent country.